Welcome back to the program. Our guest has been the head of investment research at Quadras Capital, Gbolahan Aina. And in the previous segment, we assessed the market performance in January. In this segment, let's preview February and talk about some of the evolutions, economic evolutions that will actually shape the discussion and decision for investors this time. But anyways, before we go into that, we're actually supposed to talk about treasury bills and bonds in the market as to how it played out in January. Walk us through what happened. I know that attention shifted from the secondary market to the primary markets in terms of T-bills.
Yeah, for T-bills, like I said, we've seen a lot of attraction or attention in the primary market. And basically, we've seen a lot of FPIs as well. So for them, they're comfortable with the stability in the exchange rate. And because of the easing in inflation rate as well, so it's a comfort for them. So for bond investors, inflation is always a key thing for them. So they want to look at really return in terms of their investment. So not just what they get, but in terms of real return. So that is adjusted for inflation. So in terms of the NTB auction, so we saw a lot of participation in the primary market, almost times 2 of what was being offered in terms of subscription. But in the secondary market, like you largely alluded to, there wasn't so much participation. And that's because you also seen the APS Bank issuing OMO auction, that's open market operations to mop up excess liquidity in the system. And for OMO, there's usually like a premium to what you get in the secondary market. So rather than probably go and buy from secondary market, I rather want to buy an OMO and probably get a premium in terms of OMO auction. But yields are largely falling from what we were last year. So let's look at the one-year treasury bill, for instance. The last auction, I think it closed about 13.7, and we are coming from about 18.5 if we backtrack to last year. So that's a yield of 22% to a yield of 15%. But of course, for some of the foreign portfolio investors, they still find it attractive and they still yield participation. And that's why we've been seeing oversubscription in the TOB space. But like I said, it's more on the primary end of the market and not on the secondary end of the market.
Okay. And for bonds, what exactly transpired? Because it was a bullish season for bonds as well.
Yeah, so similar thing. So for FPIs as well, they are buying in the bond space as well, and it's on the back of the moderation in inflation. So we are seeing yields 10 lower than what they were before. Of course, that signifies buying interest. But I think one thing that is important is that the yield curve is inverted. So what I mean by yield curve is when you look at the short-dated bonds, the long-dated bonds, the yield of the short-dated bonds are higher than the yield of the long-dated bonds. Ordinarily, you should expect to get higher yields at the longer end of the market, but that's not the case. That means investors' expectation of future interest rate is not too certain. So for some of them, they're positioned at the short end of the curve.
Okay, well, a bit more forward-looking now. Let's look at the economic events that will comprise or that investors should watch in the month of February.
Okay, so for February, we're going to see more corporate earnings. Like I said, we saw some corporate earnings start to trickle in. We saw Guinness, we saw Flour Mill, we saw Honeywell. But in February, we're going to see plethora of results. And of course, that might also shape market performance. But like I said, I don't expect that to be significant because some of the investors have already priced in the corporate earnings. For some of the companies that are going to be paying dividend, it might not be too attractive on a dividend yield perspective. So for instance, a GTB backtrack last year, less than 20 naira, paid 1.75 kobo. That's an attractive dividend yield. If you put that on a 50 naira, that dividend yield is not so attractive. That's just about 2%. So in terms of dividend yield, might not be attractive, but we're going to see strong corporate releases, which we've seen. And that's back of improved economy that we've seen last year to this year. PMI figures came out last week as well, and we saw that PMI is still very strong, 57, although it came lower from 58 that was recorded the month before. But that just shows that sentiment around the environment is that the economy is improving, and so you're going to see that in corporate earnings, corporate releases for the month of February.
Let's go back to the fixed income market, the debt side of things, and look at the fact that we're going to be seeing more of external borrowings from the federal government on the federal government side of operations now. And currently we have the call for the return to the JP Morgan local currency bond market index and all that. How do you expect that to shape all of the inflows from foreign investors into our market now?
So if you are taking back into the JP Morgan index, so that definitely means you're going to see more participation because there are some indexes that actually track our market. So Nigeria is included in the JP Morgan index. So there are some portfolio managers that need to allocate some of their funds into Nigeria. So more participation in the bond space. And of course, that's going to also be healthy for our reserve. So more accretion to reserve, more activity in the bond space. So it's good for the overall fixed income space, I would say.
In terms of budgets now, Mr. Kabweze sometimes last week, I think, at an event had talked about, being bullish on the passage of the budget, in the first quarter of this year. Do you see that changing anything?
Yes. So of course, if it's passed early, that means you can do more. That means you have more months to run with. Like you mentioned earlier on, this is an election year, and of course, by the time we start getting to the second half of the year, there's going to be electioneering. Focus might shift from actual policy to people trying to position for the election in 2019. So the earlier the budget is passed, the more will be achieved. So in terms of capital spend as well, you start seeing projects will begin to be done. Some of those funds might filter into the market as well. So the earlier it's passed, the better for the economy.
Still on some of the fiscal actions that we need to see. Monetary policy is a major factor right now for investment decision. But we noticed that the National Assembly has refused to approve the list of nominated candidates that were forwarded to them. How is that changing the perception in the market?
Well, I think it's going to affect a whole lot of things. So, for instance, if they can't form a quorum, that means they can't meet. And obviously, they might not be able to probably make decisions. So CBN will probably be using the open market operation tools to control liquidity in the system. But in terms of easing, everybody expects monetary easing this year. But I think they are still a bit skeptical. So what I mean is that, one, there have been some gains in terms of exchange rate. There's been some gains in terms of inflation rate moderation. And of course, they still think that the exchange rate environment is a bit fragile. So yes, they want to ease, but they are still mindful of liquidity in the system. They are still mindful of the fact that they need to protect the dollar. So they will ease, but it might not be as aggressive as people think it's going to be. And like you said, there's electioneering that's coming in. That means there's going to be a lot of spend. There's going to be a lot of liquidity in the system. And of course, that causes inflation. That's also has ability to affect the exchange rate.
What do you see changing or impacting the fixed income market, treasury bills? Are we going to see continuity in the area of focus on, primary auctions and neglecting the secondary market?
Yes, I think this pretty much theme that we have is going to be sustained. So yes, there's going to be a lot of subscription in the primary market, so a lot of primary market participation as opposed to secondary market. And of course, they're going to see more issuances because CBN needs to more public liquidity in the system. So I think it's pretty much going to be the same theme that we have going forward into the remaining part of the year.
And for bonds?
Yeah, so if I elected back into the JP Morgan index, more activity in the bond space.
And of course, the $2.5 billion that still needs to be borrowed externally again.
Yeah.
Okay, thank you very much, Gbolahan Aina. Gbolahan Aina is actually the head of investment at Codrus Capital. We appreciate your coming to Capital Market this evening. Thank you so much. Well, for next week, one of the key events to watch out for in the capital market space is the unveiling of CSCS 3-year 2018 to 2020 strategic plan. And that's for Tuesday, February the 6th, next week. Well, that's all the time we have on the program this weekend. Thanks for watching. I'm Temple Ashaju. Again, I'll see you next time.